Hi YouTube, my name is WMBishop, also known as Bill Bishop, or on eToro, WMBishop. I'm here today to give you my monthly review for October 2022. So my benchmark is represented by the ETF SWDA.L. My benchmark is the MSCI World Index. That is an index which tracks performance of the stocks all over the world, and in the month that ETF returned 5.74%. By reference, the S&P 500 in that orange bar there was up 7.99% this month, and my portfolio, which also invests all over the world, that returned 6.04%. So this month I outperformed my benchmark. I also returned 6.04%. So two things: I outperformed my benchmark, great. 6% return, that's rather high for a monthly return if you don't think it is. Well, over the course of a year, if you'd done that every month, you would more than double your money over a year. That's not sustainable in the long term. 6% in 1 month is a high return. Now, I say this every month: successful investing is achieved over the long term. We should not fixate too heavily on short-term monthly movements, and returns over 3 to 5 years are far more important to look at. I tell you this every month. I'll tell you this when I beat my benchmark, when I underperform my benchmark, when I make positive returns, and when I make a loss over a month. I will tell you this exact same message. Monthly movements in the portfolio are not hugely important. Returns over 3 to 5 years are far more important, and that's where we should judge a portfolio. And now that's where I usually stop on these monthly videos about my performance. But we need to change that, because I'll tell you a performance and then I'll tell you it doesn't mean anything. Well, over time it does mean something. So let's have a look at the graph here. This is a line chart. My portfolio against the MSCI World Index, $10,000 invested on the 1st of January 2021. The MSCI World Index, represented by the ETF with the ticker symbol SWDA.L, is the blue line, and my portfolio there is in the orange line. Now, at first glance, you might think, uh-oh, Bill's portfolio is underperforming the MSCI World Index so far after 22 months. Yes, that's true. $10,000 in the ETF SWDA.L. You would have lost money, but it would now be worth $9,790.11, whereas $10,000 invested in my portfolio on the 1st of January 2021 would now be worth $8,880.48 at the end of October 2022. That's a difference between my portfolio and that ETF of $909.63. You might be wondering, hold on, why is he telling us this? Why is he telling us that he's underperforming the benchmark so far? Well, I'm telling you this because I'm not trying to sell you anything. I'm trying to inform and educate on these videos and in my posts. I will tell you when things are going well. I will tell you when things are not going so well. I'm going to tell you the whole picture, and that's what you can come to expect from me. At the moment, my portfolio is underperforming the benchmark. In time, I expect this portfolio to considerably outperform the benchmark. I'm not going to wait until that happens to show you this graph, because people will say, oh, he's only telling us this now. He didn't tell us what was going on when he was underperforming. So here I am showing you the graph, my portfolio underperforming the MSCI World Index up to October 2022. Now, I will tell you a few things about my portfolio. At that starting point, the 1st of January 2021, 46% of my portfolio was in cash. That was not by design. That was because I was still building the portfolio and I hadn't found enough investments yet to use all of the cash. By June 2021, the cash balance had reduced from 46% down to 26%. So still, more than a quarter of my portfolio was in cash, earning absolutely nothing. And just under 3/4 of my portfolio were invested in income-producing assets, and trying to achieve a gain for the portfolio. Now, if this was 2022, where 46% of my portfolio was in cash, I would have clearly outperformed the benchmark, because 2022 was a down year and I would have looked like a genius, but I would have told you, hold on, that wasn't by design. The aim for my portfolio is to be fully invested. I don't want a huge cash balance, and it was just a coincidence. As it happened, I started this portfolio, I started in halfway through 2022. At the start of January 2021, I still had 46% in cash. That was just how it happened. And 2021 was an up year for the stock market. So for a lot of the year, I was fighting with one arm behind my back. And if you look at the line if you look at the time, July 2021, August 2021, that is the only point on that graph where my portfolio is above the benchmark, which is quite remarkable when you consider that still at that point, 1/4 of my portfolio was sitting doing zero. As we move on, the stock market around about November, December 2021, that's where it peaked and it started to go down. You can see the early parts of 2022, my portfolio went down quicker than the MSCI World Index did. That is because my portfolio is more concentrated. I'm currently invested in 24 investments. Start of the month it was 25, whereas the MSCI World Index, or that ETF, is invested in 1,514 companies. So when the market goes down, if it's on one of my companies, my portfolio is going to go down sharper than that index. And when things go up, my portfolio, I expect it to go up sharper than the MSCI World Index. I feel that during that year, 2022, my portfolio has underperformed the benchmark due to me not being exposed to so-called recovery plays, recovery stocks. For example, energy. Energy makes up 5.5% of the MSCI World Index. It doesn't have a part to play in my portfolio. Within that energy sector, you have BP, which is up 67.4% over those 22 months. But oil companies, they don't make great long-term investments. This is why I refer to them as recovery players, because they recovered when conditions after lockdown recovered. BP is up 67.4% over that period, but it needs to rise another 41% to get back to where it was in 2006. 16 years ago, it was 41% higher than where it is now. Oil companies are not good long-term investments, and that's why they're not in my portfolio. My portfolio is invested in companies with a high return on capital employed, a high return on invested capital, high operating margins, and large free cash flows. These are companies that have sustainable competitive advantages, and over time these will lead to outperformance against my benchmark. As I said, the MSCI World Index, that ETF, is represented by 1,514 companies. Compared to, at the moment, I have 22 companies and 2 ETFs in my portfolio. There are not 1,514 companies with a sustainable competitive advantage, and that is why, over the long term, my portfolio will outperform that index, and that is why I'm showing you this now, because I want you to come on a journey with me. Whether you copy me or follow me or just watch these YouTube videos, I want you to come on this journey with me because I want to show you what is possible. And I'm going to show you this from a point where I am behind my index. So let's move on to those October 2022 earnings. 11 companies in the portfolio reported earnings this month. It was quite a busy month. Out of those 11, 5 of them reported revenue and earnings growth on a year-over-year basis. That was Lockheed Martin, Visa, VeriSign, Apple, and MasterCard. I'll quickly run through their businesses. Lockheed Martin is a defense contractor. Its main customer is the US government and then their allies. Visa and MasterCard, they're payment processing companies. VeriSign maintains an internet registry for .com and .net domain names. And Apple, that's a consumer goods company, makers of the iPhone, the Mac, and a whole host of other services. Now, these two companies, their revenue growth was higher, but they had declining year-on-year earnings because of the high inflationary environment. Those were Domino's Pizza, the world's largest pizza company, and Alphabet. Alphabet, you're going to be more familiar with Google. They're the owner of Google, YouTube, and a host of smaller companies. Then we move on to three companies who had declining revenue and declining year-on-year earnings. Meta Platforms, they own Facebook, Instagram, and WhatsApp. T. Rowe Price, they're an investment company. And Kindred Group, they're an online gaming company. Perhaps their most well-known brand is Unibet. Now, out of those companies, there's 10 companies there. I was happy with the ones that had increased revenue, increased year-on-year earnings. Of course I was. I understood with Domino's and with Alphabet why they had declining year-on-year earnings despite their revenue growth. And then I understood the situation with with T. Rowe Price, and with Kindred Group. Meta Platforms, I found their results disappointing, and the attitude of the CEO untenable. I'll tell you later on, but I exited that position. The final company to report in October 22, they only report revenue on a quarterly basis. That's LVMH, that stands for Louis Vuitton Moet Hennessy. They're an owner of 75 luxury brands, and they had a 27.4% increase in their year-on-year quarterly revenue. The concern with LVMH is that a lot of their revenue comes from the Chinese consumer, and the Chinese are currently in a prolonged period of lockdown compared to the rest of the world. However, the US dollar is strong at the moment, and that boosted the situation for the US consumer as they travelled to Europe to take advantage of effectively lower prices for these luxury goods, which led to that increase in revenue. Top three gainers in October: Lockheed Martin was up 25.99%, which is an incredible amount for one company to go up by in a month. Likewise with Visa and MasterCard, up 16.61% and 15.61% respectively. All three companies, they were lower in September. This is partly due to a recovery in their share price from September, partly due to improved sentiment in the market. As you saw, the World Index was up 5.74%. So there was a general more positive sentiment in the market, and it was also due to their earnings. All three companies reported increased revenue and increased earnings on a year-over-year basis. Portfolio changes during the month. I bought Visa. I bought them on the 20th of October. I took advantage of the misunderstanding, if you will, by the market about what Visa actually do. When there's a recession on the cards, which many believe we're in a recession at the moment, MasterCard and Visa are sold off by the market. They're lumped in with the high street lenders, which is a mistake, because MasterCard and Visa, you might see them on your credit card, you might see them on the debit cards, but they don't actually lend to businesses or consumers. They are payment processors. They make money from the payments. And as people need to pay for things with their cards, Visa and MasterCard will make money from that situation. The Visa share price was down unduly, in my opinion, in October, and so I took advantage and added to that position. And at the end of the month, after reading the quarterly earnings report, after looking at the presentation and listening to the CEO on the earnings call, I decided it was time to sell Meta. I did sell that at a heavy loss, which I'm sorry to my copiers that happened, but it was the time for me to get out. I believe their legacy business has potential. It needs a lot of investment, and that's where a lot of the expenditure is going. But I don't share the vision with the CEO on the future of Meta platforms. I don't believe the metaverse will produce the results that Mark Zuckerberg believes they will. I believe that if you are going to go for this project, you need to do it in a way similar to how Alphabet go about what they call their other bets. It's a smaller part of their company. It's a loss-making part, as the metaverse is a loss-making part in Meta platforms. But they only invest a small portion of the company's money in that, whereas with Meta platforms, Mark Zuckerberg is investing too high a percentage of the company's cash flow. Next quarter, they're probably going to go cash flow negative because of this. On the earnings call, Mark Zuckerberg said, "You have to trust me on this. It will produce results," he believes, 10 years down the line. But I am of a different opinion, and at the moment he's betting the whole farm on this vision. If it comes off, the investors are going to do very well, but there's a high chance that it doesn't pay off and that bigger losses will be made. I believe there are better investments elsewhere. As an investor, I can invest in anywhere in the world. I'm not married to Meta platforms, and so I sold out of Meta platforms, and in November I will invest elsewhere. Here's my outlook for the rest of the month. I will continue to invest in companies with superior fundamentals and competitive advantages in comparison to those in the wider market. I mentioned what I believe superior fundamentals and competitive advantages are when I was talking about the MSCI Index earlier. There are 8 quarterly earnings reports for my portfolio being released in November. I will look at all those earnings reports, the presentations, and the earnings call before I report back on eToro, and I will look to continue to invest the cash balance. I ended October with 8.9% of the portfolio in cash. That is up from 8.5% at the end of September. That is partly due to the 4 dividends that we received during the month, and also because the sale of Meta platforms was for a larger amount than my purchase of Visa. As I said before, my long-term target for the cash balance for the portfolio is 0%, and at the moment my benchmark has a cash balance of 0.3%. So still a long way to go getting that down, but I will invest the portfolio cash in time. So there we are. That is the end of my video. It's getting a bit late, so I'm not looking the best. So I'll wrap this up now. Everything I said in this video should not be taken as financial advice. This is for educational purposes only. If you are looking to invest and you are unsure about anything, you should seek advice from a suitably qualified financial advisor. I will post a link to my eToro portfolio so you can have a look for yourself and read more of my posts if you wish to. And if you like the video, please consider liking the video, commenting. I'd love to hear comments from viewers, and also subscribing to my video. I'll be reporting the October earnings report soon. In the meantime, safe investing. Take care.